Welcome to our weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. The way this call works is this is an AMA, like on Reddit, meaning ask me anything. You can ask me business questions, career questions, finance questions, any questions you want. And my goal is to humbly help you take your career, your company, your portfolio, etc., to the next level. So without further ado, let's begin, and thank you. Please continue to type your questions as I will answer them all on this webcast. Now, last week at the start of the weekly webcast, we discussed the income statement. And before I take your questions, I want to quickly explain the balance sheet. And we'll use a lot of props as well to explain this. And what we'll also do is we'll look at software company Oracle's balance sheet together online as a great case study. And what I'll do is I'll ask you all one question about the balance sheet based on what I teach you quickly today. And the first person to answer the question correctly wins my silver MBA degree program for free. Now, if you're watching the replay of the webcast, then please look at the description of the webcast below for clickable Q&A links in case you want to skip the balance sheet part of the webcast. Thank you. Now, we know that the income statement tells us how much money we make. But the income statement is actually useless without the balance sheet. And Peter Lynch, who worked at Fidelity, and he's one of the best money managers in history, said this: never invest in a company without understanding its finances. The biggest losses in stocks come from companies with poor balance sheets. Now, the income statement only accounts for revenue for a given quarter, or if we actually shipped the product directly to the customer. So what happens if the customer paid us cash and we didn't ship the product yet to them? What happens? Well, we account for this on the balance sheet and not on the income statement through what is called deferred revenue. This is crucial. Okay, deferred revenue. And deferred revenue goes in the liability section of the balance sheet. And I'll come back to the deferred revenue concept very soon. Another problem with the income statement is that it doesn't tell us what the change in cash is, meaning what is our cash balance changing from one quarter to the next. So what if we generate a lot of revenue as we shipped a lot of products to a customer, but we gave them really favorable credit terms and they haven't paid us yet? Well, we account for this on the balance sheet and not on the income statement through what is called accounts receivable, which goes in the asset section of the balance sheet. And I'm going to come back to the accounts receivable concept really soon. Now, the balance sheet exists so that we can understand what we have in our possession, meaning assets, and who owns our assets. For example, if we have a car in our possession, meaning an asset, and we're financing the car from the Bank of Delaware, then we only own parts of this car. And our ownership in the car is called our equity in the car. The part of the car that is still owned by the Bank of Delaware is called a liability. So equity means ownership. I have equity in this car. Liability means I am liable to pay for the debt on this car. And the best way to understand the balance sheet is to visualize a scale. The left side of the scale must equal the right side of the scale. And so the left side is called assets, which means what we have in our possession, like a car. We have this asset. The right side of the scale has two parts: liabilities, meaning who we owe money to, and equity, who owns the car. And this will make perfect sense in a second. So in the car example, let's assume that we bought a car, meaning this DeLorean car, for $20,000. So we paid $10,000 in cash, okay, fake money, and the other $10,000 we're financing, okay, from the Bank of Delaware. Okay, so our assets is the $20,000 car, okay, what we have in our possession, and we're liable to pay on this side here the Bank of Delaware $10,000, which is liability, okay, and we own $10,000 in the car, meaning equity in the car. Equity means ownership. Assets, what we have in our possession, equals liabilities plus equity, okay? Assume this is 10 grand, this is 10 grand as well, okay? 20 grand equals the 20 grand car we have in our possession. Okay, cool. So the left side of the balance sheet is our car, okay, $20,000, meaning our asset. And it has to equal the right side of the balance sheet, meaning liabilities of 10 grand plus equity, our ownership of 10 grand. Assume this is 10K, this is 10K as well, fake money. Okay. Visualizing it makes it so much easier to understand this stuff. Now, if we paid off the loan to the Bank of Delaware for our car, then the balance sheet still balances because our $20,000 asset on the left side here equals the $20,000 in equity, meaning ownership we have. Okay, the liability of 10K is gone. Okay, assets equals liability plus equity. Now, assets are sorted by what you can convert into cash fastest and what you can convert into cash last. Okay, and this will make a lot more sense when we look together at Oracle's balance sheet online in a second. So the first thing that we list in our assets is cash. Okay. And the last thing we list is a building, okay, which takes longer to convert into cash. Now there's two categories of assets. The first is current assets, which means assets we can convert into cash within 1 year. The second category is called non-current assets, meaning assets that have a useful life that is often more than 1 year, like a new truck or property, for example. Okay, so let's look together at Oracle's balance sheet. Okay, so what I'm going to do is I'm going to go up here on my other monitor, and we're going to go to sec.gov. Okay, this is where companies have to put their financial statements online, okay, if they're publicly traded. And we'll type here Oracle Software Company. Okay, that's a ticker. And then what we'll do is we'll look at what's called the 8K. Okay, the 8K means a press release that has important stuff in it. So let me open this up right here. This here is Oracle's 8K that details or lists the financial statements for their second fiscal quarter. Okay, so what I'm going to do is I'm going to scroll down and we're going to look at the balance sheet. Okay, so it's down here somewhere. Give me 1 second. Hold on a second. Here we go. Oracle Corporation's balance sheet right here. So the first item listed is current assets. Okay, and we usually have cash and cash equivalents listed first here. Okay, and cash equivalents means items that can be immediately converted into cash, like short-term government debt, for example. And the reason why companies invest in short-term government debt like bonds is because they often get a higher interest rate on government bonds than they do when keeping cash in the bank. Makes sense, right? The second item listed here is often called, as you can see here, marketable securities, okay, which can refer to stocks or other investments. And what some companies do is they combine the first two lines here into cash and marketable securities. The third item listed is often called accounts receivable, okay, which means money that the company has not yet received from customers. Now, Oracle calls accounts receivables trade receivables here, which is the same thing. For example, if a company sold or shipped the product to the customer, but the customer has not yet given us the cash, then this is referred to as accounts receivable. And it's important to note that on the income statement, not all revenue is cash on the balance sheet, because a lot of this might be accounts receivable. We haven't received the cash yet for the product. This is why the balance sheet exists. Now, if you can't understand what a line item is on a company's financial statements, then you can do one of the following 5 things. Number 1, you can look in the quarterly earnings report, this is the 8K, to see if there's a footnote explaining the item. Okay, I don't see any footnotes here. That's usually numbers and brackets after each line item. What you can also do, number 2, is you can look in the 10K, which is the annual report, to see if there is a footnote or other documentation explaining the item. And 10Ks go into a lot more detail than the 8K does, or even the 10Q, which is the quarterly reports. And what you can do, number 3, as my son Andrew used to say, number 3, you can listen to or watch the company's quarterly webcast to see if the company explained the line item, or if a financial analyst asked about the line item during the Q&A portion of the webcast. The fourth thing you can do is you can go to the company's investor relations website to see if there are materials that you can download that explain them in more detail. Okay, explain the items. And lastly, number 5, if available, you can watch the online replay of the company's Analyst Day event to see if they explain that item in more detail. All this stuff is publicly available for everybody. You know, these professional money managers that work on Wall Street at hedge funds, mutual funds, they don't have any edge on us, the retail investor. We can get access to all this stuff as well online. So, for example, let's look here at Oracle's 8K. Okay, so the fourth line item here in current assets is called prepaid expenses and other current assets. However, if I were to search this document for prepaid expenses for more details, and do Control F, I don't see any footnote explaining this. Okay, so in this case, I recommend looking at the annual report for Oracle called the 10K and searching for prepaid expenses, or go to Investor Relations on Oracle's website to learn more about this. Now, if a company produces a physical product, then the fourth item often listed in current assets is inventory, which includes products that are not yet sold and the raw materials the company has on hand to produce the product. Now, Oracle's a software company. They don't make a physical product. That's why you don't see inventory there. Now, inventory is usually the least liquid current asset that a company has. And we know that excess inventory can literally bankrupt a company, which is what happened to the Atari Corporation when they made too many unsold ET video game cartridges in the 1980s. This bankrupted the entire video game sector, actually. Now, inventory is often classified as LIFO or FIFO. That means last in, first out, or first in, first out, respectively. Okay, and LIFO means the last, most recent item added to inventory is sold first. FIFO means the first item added to inventory is sold first. And FIFO is a more reasonable way to value inventory on the balance sheet. Now, the LIFO and FIFO concepts are important as they could have a large impact on the value of our total current assets right here. And they can also impact the income statement when accounting for the cost of goods sold. Okay, in terms of non-current assets, the first item often listed is property, plant, and equipment net, okay, or PP&E net, okay? Now, net right here refers to the value of the property and plant and equipment after including deductions for accumulated depreciation. Depreciation, we know, goes on the income statement. For example, if our property included a truck that we paid $10,000 for, okay, and we bought it 5 years ago, and the truck has a useful life of 10 years with no residual value, then the annual depreciation expense of that $10,000 truck would be $1,000. And as a result, the value of the truck as part of our non-current assets in property, plant, and equipment after 5 years will be $5,000. Now, similar to assets, the liabilities section right here, okay, liabilities, the liabilities section of the balance sheet is sorted by most liquid, okay, to least liquid. And it's got two parts, current liabilities and non-current liabilities. And current liabilities are debts or money owed in less than 1 year. And non-current liabilities are debts or money owed in more than 1 year. So Oracle, if we look here at Oracle's balance sheet, unlike Oracle's current liabilities, the first item often listed in the current liabilities section is accounts payable. Okay, most companies list this first, which refers to the debt that you owe the soonest, like credit card debt or salaries, meaning wages payable, or taxes payable. And accounts payable usually refers to money that you owe in less than 30 days, like credit card debt. Okay, now one thing I want to talk about here is deferred revenue. Okay, this is crucial. Okay, it's the most important thing to understand when assessing the health of a pipeline of a company. And deferred revenue here, okay, what it means is it's revenue that can't be recognized yet, as the product or service hasn't been shipped to the customer yet, but the customer's already paid. Okay, so if a customer paid us for something, okay, but we haven't shipped the product to them, we account for this in deferred revenue. And the reason why this is in the liability section, okay, up here, is because we are liable to deliver this product or service to the customer. And sometimes companies report their quarterly revenue and earnings, and the results are good, but the stock goes down. And one reason this might occur is because deferred revenue decreased sequentially, which could indicate that the company's pipeline or future revenue is actually deteriorating. Now, if we look here at Oracle, okay, this is the May quarter and this is the November quarter. If we look here at deferred revenue, let me scroll up so my head's not blocking it. If we look at deferred revenue here, we can see it actually went up sequentially, meaning that Oracle's pipeline is improving. It's increasing. Now, one way that financial analysts monitor revenue and deferred revenue together is through what is called bookings, which equals revenue from the current income statement plus the change in deferred revenue on the balance sheet from the current balance sheet versus the previous balance sheet. Okay, again, this is called bookings. Okay. Now that we've discussed assets and liabilities, let's talk quickly about the last part of the balance sheet, which is called equity. We know that equity refers to ownership. Okay. Now, if a company is publicly traded, equity is often called shareholders' equity. And if we look at all of our personal assets, like our car, our house, etc., and we deducted all the money that we owe, like our mortgage or payments on our cars or credit card debt, then this results in our equity balance, okay, also called net worth. Okay, so equity equals assets minus liabilities. Pardon me. Similarly, and this all I'm doing here is I'm rearranging the assets equals liabilities plus equity section. Okay. Similarly, assets minus liabilities equals equity. And so whenever you see ratios or formulas in finance and accounting, please try to rearrange the ratios or the formulas, as it makes the whole accounting and finance process much more enjoyable. For example, what we have in our possession, like our assets, minus what we owe, our liabilities, equals our net worth, our equity. Assets equals liabilities plus equity. Okay? Again, liabilities, and I'm going to rearrange it one more time. Liabilities equals assets minus equity, which makes sense because what we owe, meaning liabilities, is equal to what we have in our possession, assets, minus what we own, equity. The left side of the balance sheet must always equal the right side of the balance sheet, meaning assets has to equal liabilities plus equity. I hope that makes sense. Now, if a company is publicly traded, then we often see common shares as part of the equity section of the balance sheet. And this makes sense because shareholders own part of the company. They have equity. So if a company hires investment bankers and they raise $100 million in an IPO as a result of selling 100 million or new shares called primary shares, then what happens is on the balance sheet, cash, which is an asset, would go up by 100 million, and common shares, which is part of equity, would go up by 100 million as well. Okay. Now, you might have heard of the concept of preferred shares. And preferred shares are more commonly issued with private companies, okay, not public. And as the name suggests, they have a preferential treatment over common shares. In fact, if a company declares Chapter 11 bankruptcy, the first entities or people to get part or all of their money back, if anything, are the debt holders who have a senior claim on the company's assets. Then the preferred shareholders are second in line to receive part or all their money back. And the last entity to receive part or all of their money back, if any, is the common shareholders, the lowest of the low. And when you buy stock in publicly traded companies, this is often called common shares. Now, what is also shown in the equity section of the balance sheet is retained earnings. And retained earnings refers to the cumulative total net income from the previous income statement and current income statement after you paid out dividends, if you're paying out any dividends. And so the change in retained earnings on the current balance sheet compared to the previous balance sheet is often the net income from the current income statement. Okay, let's talk quickly about how the income statement is connected to the balance sheet. If a company has net earnings of $10 million, okay, on their income statement, the bottom line, if they have $10 million in net earnings, and if they did not pay a dividend, then assets, meaning cash, would increase by 10 million bucks, and equity, meaning retained earnings, would also increase by 10 million bucks. Retained earnings is part of equity. Okay. So retained earnings is what connects the income statement to the balance sheet. Okay. So we're done talking about the balance sheet. Here's a very, very quick conclusion for you. Okay. First of all, the balance sheet explains who owns the assets of a company, meaning the debt holders, the liabilities meaning, or shareholders' equity. And assets, the left side of the balance sheet, must always equal liabilities plus equity, the right side of the balance sheet. Okay. Assets also equals, if we just look at assets now, assets equals current assets plus non-current assets. Current assets refers to the assets that can be converted into cash in less than a year. And liabilities equals current liabilities plus non-current liabilities. And current liabilities refers to liabilities that are due in less than 1 year. Equity often equals retained earnings plus common stock. Retained earnings refers to how much of the company's net income is retained after accounting for dividends paid to shareholders. And common stock refers to ownership in the company by shareholders. Now we understand why common stock is part of equity. Lastly, the income statement is connected to the balance sheet through retained earnings, which is part of the equity section of the balance sheet. And the change in retained earnings on the balance sheet is equal to the net income from the income statement, assuming the company does not issue dividends. Okay, time for a question for all of you. And the first person to answer this correctly in the chat there wins my silver MBA for free. The question is this: what balance sheet item can help us understand what revenue might look like next quarter? Okay, I will now answer your questions after I take a very quick break. While I'm taking a quick break, here's a very short video on how to increase your confidence, which I recorded with my kids on the golf course. So thank you very much. I'll be right back to answer your questions and reveal who won the silver MBA. Thank you. I'm with Dylan and Matthew, and we're playing golf. And epic parenting fail here. Remember Mario Kart in the middle here. In the middle. Oh my God. Sorry. Or I'll make this vlog really quick so I don't die. Slowly. Okay. So I can go fast. Yogi Berra said that baseball is 90% physical. Oh, God. And the other half is mental. Or maybe it's 90% mental, the other half is physical. I can't remember. I'm worried about dying, but we're okay now, right? No more touching that. And so baseball, like any sport, is all about confidence. And the same thing with golf. And I thought of this today because when I was... Okay, go ahead. Just not too fast, okay? When I was in my backswing, I told myself I'm not going to hit a great shot, and I didn't. And confidence is not something you learn. It's a switch that you turn on or off. Okay, now hit that switch. Don't touch it again. Thanks. Okay. And so if you go in your backswing in golf or in any sport for that matter, or right before a presentation at work, if you tell yourself I'm going to do exceptionally well, I promise you will. Perception becomes reality. You got to turn that switch on. And so another thing I want to say is that in any sport, if you follow through, we know that you actually have a higher probability of hitting a good shot or making a goal, etc. And the reason is because you're focused on the end goal. You're focused on the end goal. The closest distance between 2 points is a straight line. Okay, I'm gonna end this vlog right now. I think you get the idea, so I can go spend time with my kids here. If this was helpful, and only if this was helpful, please click the like button. Don't let your kids drive ever at a young age like this. Epic parenting fail. And I will see you mañana. Thank you. All right, let's see who answered the question correctly. Let's see here. The question was, so when you look at a balance sheet, there's one line item that I love to focus on that will tell you what revenue for next quarter might look like. And quite often when companies report earnings, if they beat earnings and they beat revenue, sometimes the stock goes down. And a lot of retail investors don't understand why. And the reason is because their pipeline of business is not looking good. So I want you to always look at what's called, ready for the answer, deferred revenue. Okay, always look at it. And the easy way to do it is just look at deferred revenue from the current balance sheet versus the previous one. If it went down, there's a problem. If it went up, things are probably okay. Because deferred revenue means what revenue is going to look like next quarter. So always analyze that when companies report earnings. Let's see who got the question right. The first person to mention it was, drum roll, Don Carter. Congratulations, Don. So Don, please email support@harounventures.com and I'll give you my Silver MBA program for free. And thank you. All right. Let's kick it off now with Ginny. Hope all is well. Ginny graduated from my Platinum MBA program a couple of years ago. She's from Vietnam, lives in Australia now. She's moving to Toronto soon. So Ginny wrote, hi, Chris. Hope all is well likewise. A couple of quick questions, always. About Renaissance Technology. So for those who are not familiar with Renaissance, it's the number one hedge fund in the world. It's a tech-based AI hedge fund that has generated gross returns of about 60% since the 1980s every year. It's unbelievable. And a brilliant man named Jim Simmons started the company, and he used to work at the National Security Agency. And the way that Renaissance makes a fortune almost every year is they have thousands of computers or Linux servers running in parallel. And what these servers do is they pick stocks based on a lot of independent variables. This is closely guarded. There's no way anybody will ever find out what's in those boxes. But for example, it might analyze weather patterns. So if it's raining a lot, which it has been recently, then restaurant stocks won't do as well because people don't go out to eat as much. So that's Renaissance. Okay. So you wrote here, how would one go about achieving a return of 50 to 60% consistently year over year in the last 20 years like Renaissance? Again, it all comes down to what's in their algorithm, their Linux servers. Nobody knows. It's a black box, heavily guarded as well. But I really do believe that artificial intelligence-based investing is going to be a massive theme in the future. And I recommend that everybody try to understand how to use Excel and Excel's advanced data analysis features. Now, I have an Excel course out, and if you want, you can check it out. I'll show you how right here. Just go to my website, which is harounventures.com. And then up here, you can go to all my courses. And I'll show you really quickly here. And the Excel course, it's the longest course and most thorough course I've ever made. It's based on my experience using Excel since the 1980s. That's right. I am that old. So it's right here. You can check it out if you want to. Now, if you're in the Silver, Gold, or Platinum program, you get this for free. Okay. And our next Gold and Platinum program is going to start on May 1st. You can start Silver today. If you have questions about that, just let me know, please. Okay. Let me get back to your questions, which is more important than me pitching my stuff. Okay. All right. Next up, you wrote, I've got a friend who mentioned a combination of a couple things. Synthetics, HFT, stats, merger, arbitration, crypto, etc. in a concentrated portfolio. You mentioned to never put, and I can explain all those concepts if people are interested. You mentioned never to put more than 1% in cryptocurrency, 5% in each. So what I've said publicly always is never have more than 5% of your liquid portfolio, please, in any one stock, okay, or investment, period. The reason is because if you own a minimum of 20 stocks or 20 investments, then you're nicely diversified, and you never want to put all your eggs in one basket. When it comes to cryptos, I'm much more conservative, though. I've always said never put more than 5% of your entire liquid portfolio in cryptos, and never put more than 0.5% in any one crypto. Okay, cryptos, most of them are an absolute scam. The wonderful thing about cryptos, though, is given the FTX scandal and all the blowups we've seen in cryptos recently, the Securities and Exchange Commission in the United States is going to regulate cryptos, which is a good thing, so it'll protect us. So with Facebook's IPO, and I invested in Facebook when it was private at my venture capital firm years ago, and then when it went public in 2012. But with Facebook, what happened was, and with all publicly traded companies, the SEC makes you write a very big document called an investment offering memorandum, which people call an S1. And in this thing, which is written by investment bankers and lawyers. All the risks are detailed. Okay, we don't have this for cryptos yet, but it's coming soon because the SEC will regulate it, and that's a very positive thing for cryptos. Yeah. Okay. All right. Next up, Ginny wrote, what if I run a regression analysis and backtest stocks until past 1930? I put all variables into a function, okay, to reverse engineer the above logic using the highest possible R, or R squared, I think you mean. Yeah. Yeah. So, and then you wrote, what are my blind spots here? What am I missing? Yeah. So what I would say is you can't just look at the quantitative data for historical correlations. You got to look at qualitative stuff as well. Because what caused the stock market to pull back materially over the years is black swan events, stuff that you really can't forecast. Like 9/11, for example, or the pandemic a couple of years ago. So you have to look at qualitative things as well. Also, wars and geopolitical issues that quite often cause stocks to pull back, and the entire market as well. Yeah. Okay. And the next question is, with respect to private wealth management division at Goldman Sachs and other firms, what should I expect and what should I focus on? What are the variables that is expected from a $1 billion assets under management advisory portfolio? Yeah. So let me take a step back and just talk about a PWM, private wealth management. So private wealth management is the best job in all of finance. It's the best job because it's the only job in finance where you can work at a big investment bank and then take your clients with you and leave. Okay. Now, private wealth management, it basically means a stockbroker for very rich people. And the way they make money is based on the amount of assets that they're managing. And they usually take a 1% fee annually on the assets. Yeah, PWM. Okay. Now, in terms of what to focus on for Goldman Sachs, for example, so whenever you interview at a company, you have to understand the corporate culture of the company as well, so that you can answer questions based on the corporate culture. Now, when it comes to Goldman Sachs, and I worked there for 5 years, the way that I prepared for the interview is Goldman Sachs has 14 principles, okay? I'll make this quick. Okay, here it is here. So with Goldman Sachs, there's 14 principles as part of their corporate culture. And what you want to do is when you answer questions in a Goldman Sachs interview or in any interview with any company, you want to make sure you understand the DNA subfabric of the corporate culture of the company. So for example, our clients' interests always come first. So you want to talk about teamwork, yada, yada, go through all of these, integrity, honesty, etc., ethics, right? Okay. Okay. And one of my platinum students last year got a job at Goldman Sachs in New York in investment banking. He's in the same start class as Harvard Business School students. I'm very proud of him. And I helped him prepare for the interview by looking at that and many other things as well. Yeah. And if you're a platinum student of mine, I actually write your entire LinkedIn profile myself, not my staff. I do it myself. Okay. Next question is, what are the most misunderstood aspects of being in private wealth management? What are the challenges to become the top of the field? Please. Thank you. Yeah. So as with any industry, the most important thing is sales. And so the financial services industry, 85% of all jobs are sales oriented. You know, your network is your net worth. Relationships are always more important than product knowledge. Okay. And the best entrepreneurs and CEOs and the executives that rise through the ranks at big companies, they have one thing in common. They can sell and they can network. Okay, and I teach about this in my MBA degree program, but if you want, you can download a free book on how to network from my website. It's a couple hundred pages, plus a few hours of YouTube videos. Just go to harounmba.com and scroll all the way down to the bottom, and you can download it right here for free. Okay, let's go back here, and I'll get to the next question. And I'll open up Zoom soon as well if anybody wants to ask questions over Zoom. Okay, and I've started doing, at the beginning of the webcasts, a little teach-in on different finance topics. If people don't want me to do that anymore, let me know, please. You guys are the customer, and I want to serve you properly here. Thank you. All right. Next up, JM wrote, I found a stock trading below its intrinsic value. And what that means is if you break up the company, it's worth more dead than alive. You can sell off the assets. Usually if a company trades at below a price to book of 1, it's worth more dead than alive. And private equity firms tend to take it private and monetize it. Then you wrote, I believe we're heading for a hard landing. And hard landing means that the market's going to crash, the economy is going to pull back materially, as opposed to a soft landing. And I thought, and we all thought globally, that after the pandemic, in January of 2022, that we would reach a soft landing and the economy would rebound. But the black swan event that kind of threw a wrench, so to speak, in the machine was Russia invading Ukraine, which led to obviously a massive increase in the price of oil and inflation globally. Yeah. So you think we're heading for a hard landing, and stocks may be cheaper in the future. How much weight should I give my macro assessment to buying now? Yeah. So nobody can time the market. It's absolutely impossible. So what I recommend doing is do deep research, okay, on companies you want to invest in. I provide you with all the tools and templates in my MBA program to do so. And then be a long-term investor, okay? And then just slowly build up positions until they become 5% positions over time. Buy them on weakness. And what you can do is, after you analyze fundamentals and then valuation, you can use a little bit of technical analysis to buy stocks that you want to own for the long run that have an RSI of 20, meaning they're massively oversold. Now, you got to be careful being a short-term investor, because there's no such thing as a successful trader. Otherwise, we know their names. They don't exist. And Warren Buffett, he recently said that if you bought Coca-Cola the year it went public back in 1919 or whatever it was, if you held it for a year, it was down 50%. But if you held it for the long term, obviously you would have made an absolute fortune. You got to think long term. And Warren Buffett started buying Coca-Cola in 1988, and he's publicly said many times that he'll never sell the stock. In fact, when Buffett buys a stock, he always does so with the understanding that the stock market might be closed for 10 years. Now, obviously, he knows the market won't be closed for 10 years, but you have to think long term. And you'll sleep better at night as well, because you'll come up with your target price based on the research frameworks I provide you with. And then you don't have to worry about the path, just the destination, your target price many years from now. Don't worry about volatility. Just focus on the long term. I promise you, this is the absolute best way to make money. And even the best hedge funds do this. The best hedge funds have 3 to 5 year time horizons when they're looking to buy stocks. They're long-term focused. A lot of people think they're traders. They're not. Okay. All right. Next up, Ginny wrote, I just recently talked to someone who does software for private clients in the Singapore firm JP Morgan, I guess their office there. What sort of software besides Bloomberg, Refinitiv, Blue Matrix, FactSet, Excel, PowerPoint, BI do I use to analyze stocks? Yeah. So you mentioned there a Tableau in your follow-up. I would use that as well. I think Excel is the easiest way to do it, to analyze any company, to be intellectually honest. Now, Excel has sold, Microsoft sold over 1 billion copies of Excel since the 1980s, and it's the #1 data analysis product on the market. Most people that use Excel only use 5% of what it does. There's so much more to it, and I teach you literally every single feature, icon, menu item, and programming in Excel. Okay, just go to HarounMBA.com to read about my courses there, and you can take that Excel course for free if you register for any of my MBA programs in the past. Yeah. Okay. Next up, do you know what the Aladdin platform from Blackrock does? A friend of mine is the COO of the analytics and modeling in the analytics platform. What exactly do they do? I don't know anything about that. I'm sorry. But if anybody wants to start transacting in stocks or create a paper portfolio, what I recommend doing is you use a product for free called Think or Swim. And it's made by TD Ameritrade, and you can manage a real or a paper portfolio and just practice, including options as well, which I teach in my MBA program. And I'm happy to talk about options in more detail. It basically means putting a coat or protection on a stock. Okay. And there's much more to it than that. Now, if you're in a country where you can't get access to Think or Swim, meaning if it searches, if Think or Swim sees your IP address and notices it's outside North America, then you can always use a virtual private network. My favorite VPN to use, I got this from my favorite vlogger, a guy named Marcus Brownlee, is I use the Express VPN. Okay, it's called Express VPN. I'm not sponsored by anybody. I never will be. Okay, I'm always true to my students. You're first always, no corporation. But with ExpressVPN, it's about $10 a month. and you can run it on iPhone, Android, all desktops, laptops, tablets, etc. You can run 5 instances of it. And you can pretend that you're logged in from anywhere in the world. So right now, I'm logged in from Singapore. It might be hard to see. Yeah, but anyway, I'm logged in from Singapore right here. Yeah. Okay. Okay. Next up, Ginny wrote, I thought Blackrock, which is the largest asset management firm in the world, the CEO is Larry Fink, and I know his son. We worked in the industry together. I thought BlackRock only does ETFs, which means they use computing power to track exchange traded funds. So why do they need to build an analytic platform? Is it to cater to different target market? Yeah. So BlackRock actually it does everything in finance, pretty much everything. It's one of the most diversified financial services companies on the market. Yeah. Okay. Next up, Majed wrote, "Hey Chris, hey, hope everything is well for you and your beautiful family. Thank you." And I was on the blue screen or the green screen before, and I showed this picture. It didn't show up that well. This guy is now 18. It's crazy that they grow up fast. Yeah. Yeah. And you might wonder why I use blue in the background for my green screen and not green. And the reason is because I have green eyes. And so you can see right into my soul, or lack thereof, when I use green screen in the background instead of blue. I got to thank my Irish grandmother for my green eyes. I miss you, Grandma. Okay. So your question is, can you explain what a hedge fund trader does, salary, and what kind of skills they need to have to succeed in that field? Yeah. So the way it works at hedge funds, and I can talk about all of them. I worked in the industry for many years, including at Citadel, one of the biggest hedge funds in the world. So at a hedge fund, the people that pick stocks are usually portfolio managers and analysts. Okay, and analysts report to the portfolio manager. You might have an analyst that's focused on the semiconductor sector. Okay, an analyst that's focused on the mobile sector, etc. Okay, and the auto sector. And all these analysts feed in directly to a portfolio manager, and she or he picks stocks usually. Then what happens is, after the portfolio manager picks stocks based on the advice from the analysts, then what they do is they tell their trader to execute the trade. Right, so the trader does execution. Okay, they just, yeah, and I think that at many hedge funds in the long run, technology is going to replace the trader role completely. Yeah. Okay. Now, in terms of salary, a trader at a hedge fund probably $200,000-$300,000 at the average large hedge fund, including bonus. Now, the base might be around $150,000 to $200,000, depending on where you live. If you live in New York, it's usually that high because it's expensive to live there. And then the bonus is based on how the portfolio manager and the firm does. Now, yes, there are some years when traders can make 7 figures, but it's actually rare. It's usually the portfolio managers that make 7, 8, or 9 figures per year. Okay. In terms of skills to succeed in that field, well, you have to network a lot. Because these analysts and portfolio managers, they thoroughly understand the companies that they invest in. They meet with members of the management team of the company quite often. You also have to be very analytical. And I provide you with all the skills and tools that you need to be successful in the hedge fund industry or any finance job or any job in business in my MBA degree program. I teach based on my real life work experience and never based on theory. Okay. Next up, Ginny wrote, back to Renaissance. Sure. If I take the approach from the economist perspective, say the U.S. government decided to concentrate on green energy, for example, $1 to $2 trillion passed, then make a guess that some companies within the economy would benefit by going through 11 sectors within GICS globally. GICS are just sectors, GICS categories. There's 12 GICS categories in the S&P. Would this work better? Yeah. So I would never, it's hard. It's really, really hard to just look at government policy to pick stocks. There's many variables as well. You have to look at the price of oil. So oil is the biggest driver to help clean tech stocks. If the price of oil, if you think we go through a super cycle again, like we did in the summer of 2008, when oil reached $150 a barrel, then that will have much more of an impact on interest and future investment in solar and clean tech companies. Yeah, so I would look at that as a driver. It's really hard to use just government policy to pick stocks. Yeah, really, really tough. Yeah. Okay. And then you wrote, how would you go about assessing a retail sentiment? There's a couple of ways. So what a lot of these big hedge funds do, and they make a fortune, is they do bottoms-up analysis on stocks, of course, and they think for the long term. However, they do look at sentiment numbers. It might be consumer sentiment in the United States, and the whole world watches the American consumer closely. And the reason is the United States economy is the largest economy in the world with $23 trillion in GDP, which is like revenue for the country each year. The size of the global GDP is about 98 trillion. And what people don't understand about the U.S. economy is 2/3 of the U.S. economy is consumer spending. It's not big business. And that's why the whole world tends to watch closely how the American consumer is feeling. So you can look at consumer sentiment numbers. You can also look at retail numbers as well to see if the American consumer, for example, is shopping a lot. You can also look at other indicators like the VIX, and I can go through that in more detail if you want me to, which is the volatility index. Yeah, so let me know. I'm happy to go there. Yeah. And also, when you guys are picking stocks and investing for the long run, if you start investing in stocks and there's a stock you love and there's multiple positive data points and it doesn't go up on good news, then it might be a crowded long. It might be overowned. So be careful of that. And when I used to work in the hedge fund industry, we would always be terrified, conversely, when we were short stocks, if shorts did not go down on multiple negative news data points, right? And so that's another way of looking at sentiment. So, for example, back in January of 2021, GameStop was a crowded short. It wouldn't go down on bad news. And so GameStop went up 29.4 times. That's right, during the month of January 2021. It was absolutely terrifying. So, and the reason is because it was a very crowded short. Too many people were short it. It was crowded. And I can talk about that in much more detail if you want me to, including metrics that hedge funds look at to monitor sentiment and if a short is crowded, including the short interest ratio. Yeah. And I can show you where to get that data online for free always. Yeah. Okay. Next up, Ginny wrote, essentially my end goal is to reverse engineer the outcome of 50 to 60% year-over-year return by Renaissance. So if there are other things I've missed here, please let me know. I think it's impossible. And the reason I say it's impossible to reverse engineer what they're doing is because, again, they have thousands of Linux servers running in parallel that have probably hundreds, if not thousands, of independent variables going in to pick stocks. You know, and if it was just one independent variable, it'd be easy to understand, because if I told you x plus 1 is 3, then x as the independent variable is 2. But if I said x plus 1 plus 3 plus DeLorean plus Intel Pentium chip plus ET cartridge equals 3, what is x? We don't know. Yeah. Okay, and then you wrote, that's it for me today. Thank you so much. You're most welcome. Ask as many questions you want to. I'm always here for you. Always. Okay. Moving on to Cheyenne. Hey, Cheyenne, how are you? First time I see you on the call. I hope you join us again. Question is, hi, Chris. Hope all is well. Likewise. Would it be possible if you could please give me some advice on reaching out to people in setting up informational meetings through LinkedIn? I've recently reached out to 2 people on LinkedIn, and it has been a week, and they've not responded. I'm not sure whether I should reach out to them again or move on and ask someone else. Yeah, don't reach out again. Yeah, once is enough. Now, what I recommend doing is, well, first of all, make sure you have an incredible LinkedIn profile. And if you want me to, Cheyenne, what I can do in real time here, in a little while today during the Zoom meeting, you can come on to Zoom, and I'll tell you how in a second, and I can go through your LinkedIn profile and write it for you in real time and give you my humble thoughts, okay? Now, when you reach out to people on LinkedIn, and my success rate on getting meetings with people I've never met before using LinkedIn emails has always been 95%. And I don't say that to impress you. Rather, I say it to impress upon you the fact that you can do it as well. And the way you do it is, of course, you make sure you have an incredible LinkedIn profile, which I can help you with. And you send in-mails, okay? And the in-mails that you send, I want you to keep it short because less is more. People don't respond to long messages, unless it's my mom. Mom, I love you. You write really long emails. That's why it takes me a while to respond to them. Make the message short in mail, okay? And what I want you to do in the email is highlight 1, 2, or 3 things you have in common with that person and send the message like this. And you can do an advanced search in LinkedIn to find out what you have in common with these people. And if you want, again, during Zoom today, I can do an advanced search and help you with your profile to find people to network with. So you do an advanced search in LinkedIn and you find a couple things you have in common with somebody. And the message you send out is going to be short because less is more. It's going to be this. For example, John, hope all is well. I also went to the Toronto French School, which is true. And I also went to McGill University, true. And I live here in the Bay Area. Please let me know if you have time for a coffee or a quick Zoom call. Thanks. That's it. It works. It works. Now, you're not going to get responses to every single email, I promise you. But all you have to do is be right in business one time. It works. And the reason it works is because of this. Okay. So, Cheyenne, what I want you to do is I want you to visualize. Okay. Close your eyes and visualize. It's 20 years in the future. You're 20 years more successful than you already are today. You get an email from somebody that is very similar to you, that maybe went to the same school as you, and maybe is the same organization as you, religious organization, whatever it is, it doesn't matter. And they send you an email and they remind you of yourself. Would you take that meeting? Of course you would. People want to help you. All you got to do is ask. You know, it's prophetic. It's been true since the beginning of time. Ask and you'll receive. And it's kind of like dating. You know, you don't just give up after asking one person out and that person says no. Right? You got to ask, 50, 100 times, whatever it is, to meet your soulmate. The same thing in business. And whenever you see a job opening online, the problem is, the reality is that you have a 1 in 250 shot of getting that job. And ultimately, the person that gets that job usually knows somebody at the company. So that's what I want you to do. I want you to get a list of companies you want to work at. I want you to set up just a ton of informational meetings. And when you send those emails and you set up the informational meeting, I want you just to talk about what you have in common. Like, is that restaurant still open on Main Street by our high school? Whatever it is. Or go to their Twitter profile before the meeting to see who they follow. They follow athletes. You can talk about cricket, rugby, baseball, whatever it is, whatever they're interested in. And bond with them. You always want to bond before business. Always. Then what's going to happen is during that informational meeting, they're very politely going to say, why are we meeting? And at that point, you mention, we have similar backgrounds, and I've seen your career path, and I'm impressed with what you've done. And I also want to work in the same company and industry that you work in. And I'd love to get some advice, please. And they're going to give you a ton of advice because you would give yourself advice, a 20-year younger version of you, right? Then at the end of the meeting, you have to ask if they're hiring his or her company. And if not, do you know anybody that also went to the same school as us that might be hiring? Please let me know. You have to ask. Most people that aren't successful in sales and networking, they don't ask. You have to ask for the sale. Do this over and over again, rinse, lather, repeat. And I promise you, I put my reputation on the line. You will get that coveted job because nobody does this. And if you want more details on how to network, you can always go to my website, HarounMBA.com. At the bottom, just download this book. It'll help you a lot. Or take my MBA program. We're in the first semester, I teach how to network on steroids. Okay. And if it doesn't work for you after the methodology I mentioned here today, let me know exactly what you put in the text of the email, and I'll help you. Yeah, I'll help you get these meetings. Okay. All right, next up, the Berlin, who's from San Bernardino, California, Southern California, wrote, Chris, good morning, brother. Good to see you. I'm looking forward to meeting you. I hope you can make it this August 12th and 13th for my annual graduation event up here in the Bay Area, also on the left coast. Yeah. Okay, moving on to Mutaz, who wrote, good morning, Chris. Good morning. Good to see you. And then Manas wrote, good morning, my dear mentor. What a wonderful week and a day and a beautiful night here in India. Cool. And easy, what you was seeing snowfall in your side, really, yeah. Yeah, I didn't see any snow here. In Southern California, there was snow, oddly enough. It was bizarre. Yeah. Moving on to Victor, who wrote, I might not be able to see this. Sure, you can watch the replay, but I'll check the recording. Hopefully you can help me out. Sure. I'm not with a company. What can I do with my 401k? Or where should I transfer it to continue contributing? Yeah, you can always roll over your 401k to the next company you work at. Okay, or you can take it out completely. Okay, so for example, and I've done this too. When I worked at a big hedge fund called Citadel, I had a 401k there, and it was great because they actually more than 100% matched. It was great. And what I was able to do is roll it over to my Fidelity account later. You can always take it with you. It's always yours. Yeah. Okay. Next up, Ren Veer, who's from Mauritius, one of my Silver MBA students, wrote, Chris, how are you doing? I'm great, thanks. And I got to tell you guys a quick story about Ren Veer, because he inspires me so much. So a couple of weeks ago, I had a call with him, and he wanted to meet the CEO of this company. And that's the best way to get customers, go right to the top. And so what I advised him to do was to go to the annual shareholder meeting. And at the end of the meeting, go up to the CEO, corner him, and talk to him, because he's not going to leave that meeting until everybody does, because the board of directors is there watching him and other employees are as well. And when you talk to the CEO, which is exactly what Ren Veer did for a very large real estate company in Mauritius, you then say, do you have time for a coffee? And they're going to say yes. They're not going to say no, in front of all these board members, investors, etc. And so he got a coffee meeting with the CEO, and I think the CEO might be a customer now as well. So God bless you. Good for doing that. That's the best way to meet CEOs and customers, is to go to shareholder meetings. Anybody can do it. The way to find out about shareholder meetings is just do a search on the company and shareholder meeting. And that's how I've met tons of CEOs in the past. And nobody goes to these shareholder meetings either, man. Basically it's a bunch of old people like me. They give you bad coffee, and it's really boring. But it's the best way to get access to CEOs. Yeah, go right to the top. Don't waste time. All right. Next up, Rose, who graduated from my first MBA back in 2019. Good to see you. Rose is from the great state of Virginia. And you mentioned you're coming to graduation this year. I can't wait to see you. Yeah. So Rose wrote, what do you think of free-to-play games tracking personal user data in order to sell targeted ad space to corporation? Is it possible to effectively sell ad space without betraying users' privacy? Yeah. So what happened was, about a year ago or so, Apple changed the operating system for iOS here. So it's a lot harder for you to be able to access cookies and track people. And this has destroyed the business model of a lot of companies that sell ads and track, including Snapchat, whose stock has gotten slaughtered, and Facebook as well, who's seeing year-over-year revenue declines. So Apple's doing a great thing protecting privacy. It's really, really hard. And I think that cookies are going to be made illegal in a lot of countries. Now, a couple of years ago in Europe, they came up with, I think it's called GDPR, where you have to tell people that you're tracking, and you can't track certain people in certain regions. Right, so it's really, really hard. It's tough. And I do think the best place to advertise online is not Google. Okay, it's using Facebook. Facebook is still the cheapest and best way to do it. I really don't like Facebook's policy when it comes to elections data, etc. But they're a big machine when it comes to advertising. In fact, 40% of people on the planet use at least one Facebook app every single month. Yeah. Okay. In terms of avoiding user privacy, yeah, you can do it even using Facebook by not searching through the analytics, but you'd be doing yourself a disservice. But a lot of people, they don't allow Facebook and other software or cloud-based companies to use your data. And you can always go to settings and check don't sell my data or don't allow people to see my data. Yeah. Okay, next up, Taylor J. Music wrote, hey, Chris. Hey, Taylor. How are you, man? Okay, moving on to MD, who wrote, how do I get a good job? It comes down to networking. As I mentioned earlier, set up a ton of informational meetings with people at companies you want to work at and bond before business. It works. And if you do this 40 or 50 times with people in one company you want to work at, a big company, you will get that job. I know it sounds like a lot of work, but you got to ask yourself, how badly do you want that job? Yeah. Your network is your net worth, always. All right, moving on to the Berlin, who wrote Ken Griffin. Yeah, Ken Griffin, by the way. So for those who are not familiar with him, he is the founder and CEO of Citadel, which is a hedge fund I worked for from 2004 to 2006. I met with him a number of times. His hedge fund last year, by the way, was up. He made over $16 billion in his hedge fund. They were up 38%. This is the best return for a hedge fund in history. The second best was in 2007. John Paulson went short real estate stocks and made $15 billion. So Ken Griffin at Citadel made $16 billion last year, over $16 billion. And it was very diversified too. It wasn't just one stock. And the amazing thing is that the second best performing hedge fund last year was D.E. Shaw, which is where Jeff Bezos used to work, which made $8 billion. Yeah. And then I think also there was Bridgewater made about the same, 6 or 8 billion as well. Yeah. And the hedge fund industry last year lost over $200 billion. So it's unbelievable what Citadel's done. Now, when I met with Ken Griffin for the first time, I spent a half hour one-on-one talking to him in his office. I looked at his bookshelf. And you should always do this when you meet with people in their offices, successful people. And on his bookshelf, he had books by Damodaran, who's a professor of finance at NYU. So, of course, I ordered all of Damodaran's books and read them as well. Yeah. And we talked about video games as well. He's a big gamer, sports gaming. Yeah. Good guy. So he wrote, Ken Griffin said that consumers have $1 trillion in excess savings, but they're spending $1 billion each month. They should run out before the end of the year. What are your thoughts? Yeah. I don't know if that adds up. $1 trillion in excess savings, but they're spending $1 billion. So over 12 months, that's 12 billion. And $1 trillion is 1,000 billion. Yeah. I'm not sure. I understand the question. Sorry. Okay. All right. Next up, Manos wrote, BUSB is getting thrashed by the SEC. Is it the end of their coin? And yes, will it break Binance forever? And will Binance be the biggest crypto company in 10 years? I don't know. I mean, Binance is still the largest exchange in the world. So if there's no fraud or unethical accounting practices, I don't see any reasons why they wouldn't exist a longer term. As I mentioned in previous weeks, never leave your money in hot wallets, meaning online. Always leave your money, your cryptos, I should say, in cold storage wallets like the USB tokens offline. Yeah, because all these exchanges are having material issues, even Coinbase. Okay, next up, I've got the Berlin, who wrote, Chris, I believe Ken Griffin's company Citadel made $16 billion, the most ever. Yeah, that was last year. It's amazing. Very happy for him. Yeah. Okay, and I learned a ton at Citadel, man. So much. And a lot of the risk management and stock picking stuff that I've learned and financial modeling, I actually teach as well as part of my MBA program, based on the stuff I've picked up over the years. Yeah. Okay, they're a good steward of capital. All right. Nyack wrote, what financial service can I assist people with? Yeah. The easiest job, the best job in financial services is private wealth management, meaning managing money for wealthy people. You can help them with that. A lot of people do it, and they also have a good network of lawyers, tax accounts, etc., to help their clients with. Yeah. And if you have more questions on PWM, please let me know. Thank you. Andre, how are you? Andre is one of my MBA students. Oh, thank you for that. You're amazing. That graphic, and you donated $20. You didn't have to do that. God bless you. Thank you. That will go directly to projectmagoo.org. That's projectmagoo.org. We built our first school in Rwanda. I'm going to be doing this webcast from that school in Rwanda this June as well, the weekly webcast. Thank you. God bless you. Okay. Next up, Cheyenne has a follow-up, which is, for every week, how many emails on LinkedIn do you think people should send out on asking other people to set up informational meetings? I would do at least 5 per week. And of course, you have to pay a subscription to LinkedIn for this. And whenever somebody responds to an email, you don't get charged, or that email you sent out doesn't count, right? Yeah. But I would do 5 per week. Absolutely. Make sure your LinkedIn profile is amazing first. Again, I can help you with it today if you want me to during Zoom. All right, moving on to the Berlin, who wrote, Chris, Nancy Pelosi's salary is $200,000. I believe, and her portfolio is $120 million. What are your thoughts on that? Yeah. So that's her husband, Paul's. Her husband, Paul, has worked in financial services for a long, long time. Yeah. Yeah, it's a lot of money. Now, I do believe that senators and congresspeople and senior government officials should not be allowed to buy stocks because they might be privy to insider information. I think they should be allowed to buy ETFs like the VU, which represents the S&P 500. Yeah. Okay. Good morning to you too, Andre. Okay, Renvir from Mauritius wrote, Chris, I got an assignment for university titled, and you put in quotes here, assess the stability of banks in your country. I have some ideas about comparing the banks here to Lima, etc. Do you have any tips for me? Yeah, absolutely. So post 2008, when we were within 24 hours of bank machines not working, Congressman Bernard Frank and others came up with a new methodology to analyze banks. And what they do is they look at what's called a DV01 report, which basically means that all major banks have to report what would happen to the bank's net worth, so to speak, and debt exposure if interest rates change by 1 basis point, meaning 0.01%. They have to report that every month or so. And there's other debt to asset covenants that they have metrics in place. Do a search on Bernard Frank and financial services and rules, and you'll get a list of that to be able to apply to your country as well. Yeah. Okay. Next up, Rose wrote, when you let customers buy a product through a payment plan, like 5 easy payments of $49, what is the not yet but soon to be paid revenue classified as? Yeah, great question. So whenever somebody pays you cash for a product, if you haven't shipped it to them, you cannot recognize this revenue yet. It goes into deferred revenue. So let's say that a customer bought 2 products from me, okay? They bought a chip and a video game, okay? And they gave me the money, and I only shipped 1. I can only recognize the revenue on the one I shipped. And so the way to think about it from a subscription business model perspective, with Netflix, for example, if you spend $10 every single month on Netflix streaming, they can only recognize that $10 once they've delivered the streaming to you, meaning once the month has passed. If you pay up front for all of that, say you get 2 months worth of Netflix service for $10 per month, and you pay Netflix right up front, right? They don't do it that way, but you can hypothetically. And only 1 month has gone by, you can only recognize revenue on this 1 month, not this one yet. Yeah. Okay. And I'm transitioning towards a subscription business plan as well with my company. Okay. Next up, Manas wrote, Russia is supplying 4 times more oil to India. And so overall trade between India and Russia has increased 400% over the past year. Yeah. And then you wrote BRICS. And BRICS stands for Brazil, Russia, India, and China. BRICS is planning to dumb dollar and do business in the yuan, the Chinese currency, or the rupee, the Russian currency. What are your thoughts on this one? Yeah. So I still believe that the United States dollar is the reserve currency of the world. This is fake money, right? So the United States is the very last company on the planet, so to speak, that would go bankrupt. And that's why financial analysts all over the world, when they value companies, when they look at the risk-free rate, they still use U.S. Treasuries. Yeah. And years ago, it used to be the United Kingdom. That was kind of the reserve standard of the pound. Then it transitioned to the United Kingdom and a bunch of European companies or countries, and we would use LIBOR, which stood for London Interbank Offer Rate. But now it's the U.S. dollar. Yeah. And I don't see that going away. Yeah. Okay. All right. Next up, Renvir wrote, while researching, I found out some SEC filings in 2005 pointing out all the red flags about Madoff's Ponzi, and yet nothing was done. Do you think things like that still happen today? Yeah, the issue with Madoff, and for those who are not familiar with Madoff, what happened was he ran this big mutual fund. It was a Ponzi scheme. And what he did, and this is an actual statement I have props for everything that I got on Madoff's fund. Okay, so all this here is a customer statement, and I blacked out the name of the person, but a customer statement of all the stocks that this person owns in Madoff's fund. But this was all pretend. He made all this stuff up. I knew he was a scammer before anybody, though, because his name was Madoff, because he made off awful. Sorry. The reason why regulators didn't go after him was obviously they made a mistake, but also he was on the board of the NASDAQ. Right, and he had a lot of powerful friends in powerful places. Yeah. But I'm telling you, man, if you read any annual report or S1 filing, you will always find risks. Yeah. So if you had uncovered that risk at the time, you probably would have redeemed. Yeah. All right. Next up, the Berlin wrote, Chris, did you watch the Fed speak? Papa Powell said they have to raise rates more than expected, and Ms. Warren went downtown on Jerome Powell. Yeah. So basically, what happened was the Federal Reserve, I think it was last Thursday or Friday. What they basically said was, hey, inflation is a little bit worse than we expected now. And so last year, the Federal Reserve, what they did was they increased interest rates for a couple of months in a row by 0.75%. That's 75 basis points. And then what they did was they started raising rates by less, 0.5 basis points or 0.5% every month. Then they went to 0.25% recently. And now people think, given the tone from the Federal Reserve last Thursday or Friday, that they're going to raise rates 50 basis points or 75 basis points going forward. I think it's going to be 50 basis points initially. Yeah. The problem is when the Fed raises rates, it doesn't filter through and impact the economy, usually for 12 to 18 months. It takes a while. So they're being really, really careful with it. And they're privy to data that we don't have, which is why they started cutting rates or raising rates by only 25 basis points. But given data they're looking at right now, it leads them to believe that, hey, they have to raise rates more than expected. Now, the best way to monitor and analyze rates is you can go to treasury.gov, okay? And right here you go to data and you look at the yield curve, okay? And I've talked about this in the past, so I won't talk about it today unless you guys want me to. And then you can look at the current month to see what the heck is going on with rates. All right, so right now, you could see that the 1 month is 4.77 and the 3 month is terrifying, man. It went up last week to 5.06. This is really scary. And this is a massive differential versus the 30-year here, which is at 3.88. And this is an inverted yield curve, meaning when rates are higher now versus in the future. And what this means is in most cases, when you see this pattern, in almost all cases, a recession is coming. Because if rates are lower in 30 years versus today in the 3 month, that means that the market expects the government to cut rates in the future, meaning the economy will suck. And so the government will have to cut rates in order to make the economy better. And right here, this is what you use for the risk-free rate, as I mentioned earlier. Now, governments have, and this is a new course I'm working on, it's called the Complete Bond Course, Macro Course, and How to Invest Based on Fixed Income Stuff. But governments have two, and I love props, as you know. Governments have two kinds of medicine they use to fix the economy. Okay, one of them is called fiscal policy. Okay, which basically means spending money to to build bridges and walls or whatever it is, and that creates jobs. That's fiscal policy. Okay, or cut taxes. Then there's monetary policy. Okay, monetary policy is what we just talked about with respect to the Treasury. Monetary policy means you can either raise interest rates or cut them to help the economy. The problem is when you run out of medicine in both bottles, then the economy's in big trouble. And that happened during the pandemic. They couldn't cut rates anymore. And so when it comes to monetary policy, the policy of money, the way that the Federal Reserve increases or decreases interest rates is they add more money to the economy to jumpstart the economy. And it's a very smart thing to do, to raise rates when times are good, right? And I fault the government in hindsight for not raising rates more so, especially during the Trump administration. It is what it is. So if you raise rates when times are good, then when times are bad, you can jumpstart the economy by cutting rates, by flooding the market with more money. And the way that the government does this is as follows. Let's pretend that I'm the Federal Reserve, okay? I'm the government, and you're all consumers or investors. I'm the government. And let's pretend this is a bond, okay? So what I do is I sell this bond to you, okay? You're all investors or consumers. I sell this bond to you, okay? And in return, you give me your money. Okay. Now what I do, you have this bond, is I take some of that money out of circulation. It's gone. And whenever the supply of anything goes down, the price of that goes up. So that means interest rates are higher. And vice versa. What I can do as a government, I can buy this bond back from you, give you more money. And because there's more money out there in circulation, then interest rates go down. Okay. So right now that the Fed is tightening, meaning raising rates. And as we looked at with the yield curve is kind of implying that we are going to recession. Yeah. And by the way, so I've worked with a lot of people in the hedge fund industry that have done incredibly well in stocks, with stocks. And all the people I've worked with that have done really well managing billions of dollars, they all have one or two friends that understand fixed income, meaning bonds. And fixed income, so the yield curve and bond investors tend to see problems with the economy before equity or stock investors do. And what I'm going to do is a couple weeks from now on March 23rd, which is a Thursday, I think, on this weekly call, I'm going to have a former portfolio manager from Fidelity. He's a really big guy. He's amazing. Who's going to explain macro 101. All this fixed income stuff, bonds, everything to all of you. Yeah. And to me. Okay. All right, next up, Manas wrote, the Federal Reserve looks very aggressive. Powell was really to the point of testimony he gave this week. Is a 75 basis point hike coming soon? If yes, and if he does it for the entire 2023, will this break the markets and economic development? Yeah. So I think the Fed will raise by 50 basis points first. It's too much of a shock to go from 25 to 75 overnight. Yeah. In terms of will this break the economy? Most likely. But if you don't raise rates when there's inflation, you don't have an economy. So what we saw was after World War I in Germany, inflation was crazy and the government did not raise interest rates. And what happened was, and this is going to blow you away, you had, Germany, money, post-World War I, wheelbarrow. You'll correct my spelling. What happened was people would actually use wheelbarrows, see this, to take tons of money into the market just to buy a loaf of bread. Yeah, loaf of bread. Kids would play with it, with money, making kites. Women made dresses out of money as well. So it was ridiculous what happened, right? And the German economy fell apart post-World War I. The same thing happened in the fall of 2008. In September of 2008, Zimbabwe's currency had daily inflation of 98%, right? So their currency became worthless. Same thing with Venezuela, with the fuerte, their currency, which ironically means strong. With the fuerte currency, they saw 1,000,000% daily interest, daily inflation a couple of years ago, and they had to scrap the entire currency. So the bottom line is, if you don't raise interest rates when you have inflation, you don't have an economy. Now, let's go back in time together to the early 1980s. In the early 1980s, in the United States, we had 20% inflation and 10% unemployment. It was awful. And so what happened was Paul Volcker, God bless him, he passed away. He was the head of the Federal Reserve. He actually got advice from Helmut Kohl and German politicians in terms of, how do we fix the U.S. economy? You guys went through this post-World War I. And the Germans advised, correctly so, that they raise rates to 20%. It was awful, man, the early 80s. It was terrible. Things were much worse then than today. And when rates went up to 20%, every asset class got murdered except for government bonds. Because if you think about it, if rates are 20%, you're just going to keep your money in the bank. Why would you invest in stocks or venture capital? And no companies were born, and the IPO market sucked then. I don't think things are as bad today as they were back then, but I do believe that inflation is a material problem, and we have to keep raising interest rates until it goes away. Otherwise, you don't have an economy, right? No pain, no gain. Yeah. Okay. All right. Okay, next up, give me 1 second. Hold on, guys, here. All right, and I see Julie on the call later today. Julie, how are you? Julie and I worked at Goldman Sachs. She graduated from my MBA program a couple of years ago. And I think you lived in Germany for a while, but you're back in the U.S. working in solar with your brother on the East Coast there. Yeah. Okay, hold on a second, guys. Sometimes it skips on me. Give me 1 second here. Okay, I found my spot. Okay. All right, next up, Manas wrote, Silvergate, which is a crypto bank, went belly up forever. It shook the markets. Do you think more interest rates will keep breaking companies? And what's the most the Fed can hike rates to your estimate? Yeah. So as rates increase, as I mentioned with the early 1980s, as rates increase, any other investment class gets hit hard. real estate, cryptos, NFTs, if anybody talks about that stuff anymore, etc. Yeah. So as rates continue to increase, I think it's going to hurt all speculative asset classes. You'll see it in venture capital as well. Not many companies going public recently either. The number of IPOs is down materially year over year. Yeah. So every sector is going to get hit hard. Okay. Okay. In terms of what is the most the Federal Reserve can increase interest rates by, it all depends. Depends on if unemployment comes down or not. Okay. So or goes. Yeah. So what the government is trying to do is this. So the government wants unemployment to go up a lot because the biggest input price to produce anything is the price of labor. And if unemployment continues to stay at well below 4%, then labor prices are going to keep going up. But if unemployment is higher, then labor prices will go down, which means that we won't have an inflationary economic environment anymore. And so the government is looking closely at unemployment numbers, and they want to see that spike materially. So if unemployment is not above 5% by the end of this year, then I think the government's going to keep raising rates. Will we get to 20% inflation like in the early 80s? No, I don't think so. And 20% interest rates? No. Can interest rates, become 8 or 9% within a few years? Absolutely. Absolutely. Will it hurt the economy? Yes, big time. But we'll have an economy in the long run. If we don't beat inflation, we're done. Yeah. Okay. All right. Next question is, let's assume that you're 18 now. Yes, you're 18. Thank you. As you pass high school, what would you do if you were attracted towards crypto markets and NFTs? What would you do and why? Yeah. So what I would probably do when it comes to cryptos is I would try my best to understand how to create a blockchain. And you can learn this by taking a course by Kirill on Kiril, I think his first name is spelled, on Udemy, how to make a blockchain if you want to. I would get really, really technical as well. I haven't heard anybody mention NFTs in a while, which makes sense because as interest rates go up, people don't focus on speculative asset classes as much anymore. Yeah. And then you wrote here, you never talk about your hedge fund and your journey in your hedge fund. What happens there, how one works, and how do people put money in your hedge fund? Are returns guaranteed by you? Yeah. So returns are never guaranteed by you. Now, when you start a hedge fund, I hired a lawyer named Jim Grant at the Securities Law Group here in San Francisco. Good dude. He put together an investment offering memorandum for me, which basically outlined all my risk management parameters for my investors. He also set up an offshore bank in the British Virgin Islands and an onshore bank for me as well, so I could take money from international investors. Now, before anybody invests, they have to fill out what's called subscription documents, which is 10 to 20 pages Q&A, which asks them what's your liquid net worth, all that stuff, and you have to have $1 million liquid net worth to invest, always in hedge funds. Also, post 9/11 and the Patriot Act, there are these AML or anti-money laundering forms they have to fill out. Yeah, returns are never guaranteed ever. Yeah, and then whenever you manage money, you always have to, or start a company, you always got to get lawyers to create these things for you to protect you and to protect them as well. Yeah. Okay, I'm not a big fan though of the hedge fund industry. I worked in it for years. It's a little bit too short-term focused, which is why I transitioned my hedge fund into a venture capital firm where I had an investment actually pre-IPO in Facebook. Yeah. And then I decided I just want to teach. I just love helping people. I'd rather help you make money than myself. All right. Next up, Delo wrote, good morning. How are you? Okay, calls in, wrote, hey, Chris. Hey, I took your complete personal finance course. Thank you. So now I'm working on improving my finances. Cool. I'm working on a book. Please recommend editors and book cover designers that are good but affordable. Yeah. So what I did, and for anybody who wants to write a book, I'm going to give you a free template you can use to write your book. So all you do is you go to harounmba.com/all lowercase write book. Okay. And this is a free template to download. I don't ask for your email or anything. And all you have to do is fill out this template here. It's really, really easy. Sorry. It's in Word format. It'll download in a second here. And there's one page of instruction on the first page. and it will tell you how to publish on Amazon Print, Kindle, as well as Audible, which is ACX. Okay. All right. It works. Anyway, just go to that website. I promise you'll be able to download it. If you have questions about this book, download, let me know, and thank you as always. Yeah. In terms of where to get the cover designed, you can go to Fiverr.com. That's Fiverr.com. And you can hire somebody there for maybe 20 or 30 bucks to create an incredible cover for you. Now, that's how I got all of my books. All of my books, the covers, I got them done there as well. Okay, so for example, this one, I actually got this done for, I think, 20 bucks I paid at Fiverr.com. Fiverr is based, in Tel Aviv. And if you're going to hire somebody over Fiverr, use UltraCon22. She's based in Bangladesh. She does all my books. I tip her really well. And please tip her well as well. Yeah. The same thing with this book here. This one you guys can download for free. I got it done on Fiverr as well. Yeah. In terms of editor, I would go to Upwork.com because Upwork has much better editors there than you'll find on Fiverr. Yeah. Yeah. And I signed a contract with McGraw Hill recently to publish a book called Finance Essentials. It's going to be part of their Essentials series. And so I sent them my manuscript, and the book might be out by this November if I decide to go through with it. Yeah. Okay. All right. Next up, Eduardo, who goes by Electronics Onsite. Good to see you, Eduardo. Eduardo wrote, Chris, my son is competing in the National Taekwondo tournament this weekend. We hope he wins. I hope so, too. I remember you mentioned he's one of the best in the entire country for his age group. Yeah, God bless you, and I look forward to it. And I hope next week you have great news for us. Yeah, thank you. Very cool. I'm sure he's going to be in the Olympics, too. That's exciting for you. Excellent. Okay, and I know you're based in Texas. Please send your tax code here to the left coast. I'd appreciate that. Thanks. All right. Leslie, hey, how are you? Good to see you. Good to see you. T, good morning. Okay. All right. All right, next up, Visme wrote, hi, Chris. I have an interview tomorrow at a company for a financial services position. I don't know how to prepare for it. Please help. Yeah. Yeah, if you want, what you can do is I might open up Zoom in a little bit on this call. And you can join. If not, you can join the weekly Silver Zoom as well. And I'll mention how at the end of this call today. And I'll help you interview. I'll help you prepare. Yeah. But what I recommend doing is for anybody ever interviewing at a company or anybody that's going to be doing informational meetings, I want you to go to Google Alerts, okay, and set up email alerts in case any news comes out on the company so that when you have the informational interview or the actual interview, if they ask you about news on the company, or you want to just have kind of, I don't know, you want to bond over recent developments, you can discuss that. Yeah. Yeah. But again, come on Zoom later if you want, and I'll help you ace your interview. Yeah. Okay. And I've actually interviewed more than 1,000 people in my career. That's about one per week over 20 years. Yeah. Okay. All right. Next up, I've got here. Hold on a second. And then Ginny wrote, "Wow, the vlog is amazing. I love it. I'm going golfing soon. Thanks. Yeah, that was with my kids. That was filmed a while ago. You can see I'm older now. Yeah. And my next Billions vlog is coming out, I think, in a couple of days. Yeah. And Bobby Axelrod is coming back to Billions as well, which is awesome. Yeah. And then T wrote here, Chris, I actually said deferred revenue first. Let me go up there to see if that's correct. Hold on a second. Deferred revenue. Okay. If you did, send an email as well to support@HarounVentures.com. I'll give you that for free as well as to Don for free. Yeah. Okay. Thank you. I have senior moments sometimes, folks. The older I got, the better I was. Okay. All right. And Icy donated $10 Australian. Thank you so much. I appreciate that. Again, that will all go to Project Magoo, where I'm building schools with the profits from all my stuff in Africa. Thank you. So Icy wrote, hi, Chris. Geopolitical analyst Peter Zelhan says, globalization is coming to an end. Countries will need to make their own goods, grow their own food, and secure their own energy. What is your take? Yeah. Thanks for the question. So I know that China is trying to be a little bit less dependent on the rest of the world. They're trying to be a little bit less of an export-oriented nation. So China's goal over the next 20 or 30 years is to build up their internal economy, their domestic economy, consumer spending economy, so they don't have to rely on exports to the United States. If China does that, great. But I still believe that global trade will exist in the future. Yeah, I don't think all these walls are going up. Now, it's interesting, though, because when you look at, I live in the United States, and, here we think that, oh, my God, the whole world is against what Russia is doing. But only 33% of countries actually have economic sanctions on Russia. And the countries that are really adamant against Russia invading Ukraine are only really North America, Europe, Japan, and Australia. The rest of the world cares a little bit less, which is unfortunate. Yeah. And so it's an ideological battle. It's Cold War Part 2. Putin, he did his thesis in undergrad on minerals and what would happen if the USSR controlled most of the natural resources in the world. And so Putin knows that the ruble is dead and that oil is not going to be a big driver of growth in the long run, given clean tech. So he's trying to reassemble the USSR before they become irrelevant, which they will, I hope. Yeah. And there's a famous Saudi Aramco executive who once said, the Stone Age did not end because they ran out of stones. Yeah. Now, my comments against Russia are not against Russian people. It's against Putin, who I despise. Okay. All right. Okay. All right. All right. And then Ginny is asking about synthetics, HFT, stat, merger, arb, etc. Yeah. So those questions I answer in my upcoming Billions vlog, where I talk about episode 2, and I talk about merger arb, and I give a big case study on that. That should hit my YouTube channel in a couple of days. Yeah. Okay. Next up, Abel wrote, do you suggest to buy real estate, meaning a house with all the cash, or involving your credit card is better? Yeah, never use credit card to buy a house, ever. Yeah. But in terms of buying a house, it probably is the best investment you'll ever make. Partially because if you think about it, if you rent and you pay, say, $600 a month renting for the next 50 years, if you invested that money in the markets, or you invest that money in real estate, better yet, your house, that would be worth between $5 and $10 million in 50 years. Plus, you get tax breaks in many countries for owning a place. Yeah, but don't use your credit card. Yeah. Okay. And housing prices, I expect them to continue to come down as interest rates go up. Yeah. All right. So what I'm going to do right now is I'm going to open up Zoom. And if you guys want, you can join Zoom. I'll continue to answer questions first, though, from YouTube Live. And as you join Zoom, if you have a question, just raise your hand. And I'll show you how to get onto Zoom here as well. Give me 1 second. Okay, here we go. So the way to get onto Zoom, and the book did load finally. The way to get onto Zoom is you go to harounmba.com/all lowercase Zoom. Okay. And you click this link right here in order to join Zoom. So what I'll do is I'll turn it on now, and I'll come back to this in a little bit as I continue to answer other questions that you guys have. Okay, give me 1 second. Allow. All right, here we go. It's the wrong camera. Okay. Let's go here. Great. And I will wait for you guys to join here. Okay. All right, next question I've got here is, Bakari wrote, hi, Chris. Hope you're doing well. Likewise. And thank you for your courses and weekly Q&A. Best regards. Thank you, and God bless you. Thank you. Okay, next up we have Ya from Colorado, one of my MBA students. Wrote, good day, everyone. Great to see you. And then your question is, why do companies register in Delaware? And how does that work with taxes? Yeah, so quite often you'll hear of a Delaware registered company. The reason is, several hundred years ago when the United States was founded, the founding fathers, a lot of them had law degrees and a lot of them lived in Delaware. And so what they did was it's like any industry. If you have a big concentration of experts or products being made there, usually it's cheaper because of mass production. And so with Delaware, you pay a lot less in taxes to start a company. Okay, versus California, which is criminal, man. Where I am, it's $800 a year to have an LLC, even more than that now. Yeah. All right. Next up, the Vanquisher wrote, "What's the best way to find a job while homeless?" Yeah. So I recommend. So if you want, you can go to public libraries if you don't have an iPhone. And what you can do is you can set up your LinkedIn profile, and then you can network from there. Dude, I can't do this. Send me a message and mention your name as the Vanquisher, and I'm going to give you my MBA program for free, and I'm going to help you. Okay. So go to email support@harounventures.com. Okay, and I'll take care of you. Yeah. Okay. I say it with love in my heart. Okay. And then the Vanquisher wrote, "I just moved. Can I still do my taxes in a different state, even though I'm not in the same state anymore?" Yeah. So talk to an accountant first, and don't anybody do your own taxes ever, please. Always hire somebody to do it for you, because you will get a lot more tax breaks. Now, if you want to declare taxes in a different state, you can pay less taxes. Usually you have to live in that state for at least 6 months of the year. A lot of people here in California, where taxes are high, live 6 months and 1 day in Tahoe, in Nevada. Yeah, another state. Yeah. Okay. Next up, Ya from Colorado wrote, "Let's say I have $100 of Bitcoin, and I now have $150 of Bitcoin, so a profit of $50. I bought an item for $50 using Bitcoin. Do I still pay capital gains tax for the $50 in profit?" Absolutely. Absolutely. And I was interviewed on NBC on television. That was me showing off about this exact topic. This exact topic. You can do a search on YouTube for my name and NBC interview. Yeah. I was nervous. Okay. All right. And then the Vanquisher wrote, "Why are ETFs the best way to purchase stocks?" Yeah. So they're the best way to purchase a collection of stocks. Like, don't buy mutual funds, because mutual funds are expensive. They have annual fees of a couple percent. It's a ripoff. And they underperform ETFs. Okay. So the best ETF that I buy, and I recommend looking at this, do your own research on it. If we go to finance.yahoo.com, the ETF that I usually buy, when I'm not sure where to put my capital, is the VU. Okay. And this is this only has 0.04% fees on an annual basis. That means 4 pennies per $100 per year. Unlike mutual funds, which can be 300 to 400 basis points per year. It's very liquid as well in terms of the holdings. You'll see it's the S&P 500. Here are the 12 GICS codes or sectors of the S&P 500. Yeah. And there's other ETFs you can invest in as well. Now, the best website for analyzing ETFs is called ETF Database, etfdb.com. And you can do a screen here as well. You can screen by geography if you want to, by asset class, etc. Yeah. And if you have questions about individual ETFs, please let me know. I'm always here to help. Okay. Okay. Next up, let me just check Zoom here. Okay. I'm going to admit you guys into Zoom. Okay. And again, put your hand up if you guys have a question. I'll come back to you. Okay. Next up, T has a question, which is, when would be the best time to ask for an internal transfer within the firm? Do you recommend working for the current role for at least 2 years? Thanks. Yeah. It's hard to first join a company and want to transition right away. So what I recommend doing is stay there for at least a couple of years, like you've done, 2 years, I think. And I want you to set up networking meetings with people that work in different divisions, okay, that have something in common with you. And you can always go to LinkedIn, do an advanced search, and find people that went to the same school or from the same hometown as you, and just send an email, or send an email on corporate email, because they'll probably look at it, and just say, Joanne, hope all is well. I'm also, from Mississauga. I also went to Toronto French School, and I work here in the X department. Please let me know if you have time for a coffee. Thanks a lot, your future boss. No, thanks a lot, Chris. Yeah. Set up a ton of informational meetings that way, And I promise you it's the best way to do it. Now, when I worked at Goldman Sachs, I transferred departments a couple times. And I've transferred departments and geographic locations at Accenture when I worked there, and at other companies as well. But I did it by aggressively networking. Yeah. Okay. Then the Vankshire just wrote, "You aren't Chris." I don't know what that means. Yeah. Okay. All right. Next up, Joshua wrote, Mo, which is Philip Morris, Altria, V, which is Visa, and AXP, which is American Express, all seem like crowded longs. Yeah, I haven't looked at them closely. Yeah. But I do know that American Express is one of Warren Buffett's biggest positions. Yeah. Okay. Okay. All right. Next up, and Vankshire, I love you. Okay. All right. Next up, Janice wrote, "Hi, Chris. Tomorrow I have to explain to my boss why my team is being scheduled on an unrealistic deadline. Any advice for me?" Yeah. Oof. Yeah. Yeah. Okay. Why you're behind schedule? Yeah. Yeah. So I would probably start off the meeting by talking about what you've accomplished so far. And then mention that in terms of meeting the deadline date, we can still make it, but we'd have to remove these provisions. Okay, so you can kind of give the impression you can still make the deadline, but remove these provisions. So for example, when I used to be a programmer 8 million years ago, at the very last second, everyone was always behind schedule programming. At the last second, we always got rid of the nice to haves, like the bells and whistles, and we just focused on the need to haves. So maybe break it up into two different compartments, two different categories. We can meet the deadline by including these need to haves. However, if you want us to also include these nice to haves, it might take us a little bit longer. Yeah. But also work on maybe come up with a couple ideas as to how you can still make the deadline with all the nice to haves. Including maybe, bringing on a couple of resources or hiring independent contractors through Upwork, etc. Yeah. So always think about the solution as well. Yeah. And if you want to provide me with more detail on what this is, please let me know. And thank you as always. Okay. All right. Next up, Joshua wrote, "What do you think about the banking industry today after being discussed by Jay Powell yesterday's hearings?" Yeah. About questionable capital requirements. Yeah. I think the financial system is much more sound today than it was back in 2008. So 2008, a lot of banks were recklessly lending, investing in credit default swaps, and they were over levered. And after 2008, Bernard Frank, who's a congressman, basically came up with these new laws that would make banks' financial statements more sound. So I don't think things are as bad today as people think they are. Yeah. All right. Next up, Rose wrote, "Chris, I remember last year we tested out your HEV Metaverse. Is the plan still in the works? I hear the idea of the Metaverse taking over is turning out to be just a fantasy, given Meta's conundrum." Yeah, it's still going to happen longer term. So for those of you not familiar with what Rose is talking about, so what I did was a year ago, if you go to MBA Metaverse, what I did was I did an entire webcast from the Metaverse here. And what you can do is you can just click on here to join that Metaverse webcast if you want to. I still think it's something that's going to matter in the long run. But Facebook's execution has certainly not been good when it comes to Metaverse stuff. Facebook has spent $15 billion on Metaverse R&D, and they really have nothing groundbreaking to show for it. There's only 15 million people that have bought Facebook Oculus headsets. Now, to compare and contrast that $15 billion in R&D to Apple. So Apple, when they launched the iPhone back in 2007, they spent $100 million on R&D on this product. And it was obviously a home run of investment. But Facebook is certainly not a good steward of capital. They're doing a very poor job with the Metaverse. I beta tested the new product as well. The problem with it is that you get really dizzy. In fact, the United States Department of Defense signed a $20 billion contract with Facebook to buy Metaverse products for testing, for warfare testing. And 85% of people at DoD that use the Meta product got really dizzy. Yeah. So if anybody's going to figure this out, I think it's going to be Apple first before. Yeah. And Apple's VR product should be coming out later this year. I know that because you can also search for the patents online to see it. Okay. Next up, Ginny wrote, out of curiosity, what is quantum computers? And would it change anything in regards to closing the gap between hedge funds like Renaissance versus other funds? Yeah, quantum computers, it basically just means a supercomputer, like a Cray supercomputer, for example, or the old SGI computers, Silicon Graphics. It just does high-end processing with tons of these chip things in them, processors. In terms of, will this help people to create artificial intelligence-based algorithms for picking stocks? Absolutely, in the long run. Yeah, in the long run. Yeah. But nobody has been able to replicate what Renaissance has done. Then you wrote, thank you so much. I'll start with Excel, understanding the qualitative things like geopolitical issues, oil prices, matrix, etc. Awesome. Cool. Okay. All right. And let me go over here to Zoom. Okay. And I've got Ginny and Daniel on Zoom. Please be prepared with your questions. I'll come back to you in a second. Okay. Next up, Cheyenne wrote, thank you so much, Chris. Your advice and example is very helpful. I really appreciate you sharing. My pleasure. That's what I'm here for. Okay. All right. Okay. And thank you, T, for that comment as well. Appreciate that. Okay, moving on to Kyle. Kyle wrote, one of my friends used commercial satellite APIs, I mean application programming interfaces, yeah, plus machine learning to analyze global shipping patterns and crop yield irregularities. What are your thoughts? What would you do for commodity futures? Yeah. So this is something a lot of hedge funds do. A lot of hedge funds, what they do is they rent satellites and they count the number of cars in parking lots for retail companies. And some hedge funds also count the number of cars around the sales department buildings at the end of quarters for companies that might miss. And so more salespeople show up to work on the last day of the quarter if they're going to miss numbers. I don't know if that's legal though. It's kind of a gray area. So when it comes to commodity futures, you can certainly look at weather patterns as well to be able to predict the future price of crops. A lot of people do this. And when I worked at Citadel many years ago, we had meteorologists on the payroll as well that would help us understand weather patterns. Yeah. Okay. And they were based in Chicago where the headquarters were. All right, next up we have Julie. How are you, Julie? Julie and I worked at Goldman at the same time. And Julie is one of the people that started the charitable side of Goldman called CTW, which is Community Teamwork. It's good to see you. It's been a while. So Julie wrote, great to see your smiling face. Likewise. In a construction business, if you accept 10% as a deposit before you start the project, what would you book that as? Deferred revenue? Yes. Because you got the cash, but you have not delivered the service, meaning construction, yet. This goes into deferred revenue in the liability section on your balance sheet. Yeah. And then you wrote, and if you pay the sales guy 1/2 of his commission at that time of the sale out of the deposit, what would you book that as? Yeah, so that would be on your income statement in sales and marketing. Yeah, and then you wrote, and to book the remaining 50% of commission. Yeah, so yeah, once you pay the employee that commission, you can recognize that expense. Yeah. And another way to think about it, if that's hard to understand, is that if you hire people to create a product, develop a product, like produce a new semiconductor. You're going to expense that right away because you're paying them now. It's an expense. You don't have to expense it or recognize that expense once you ship that processor. Yeah, it's part of R&D. Yeah, and sales and marketing or S&M is the same thing. Yeah. Okay. Next up, I have got here Kyle, who wrote, I'm looking to get into some T-bills for roughly 6 months because I believe I'd like to get into risk assets by then, but like to get some yield. What are your thoughts? Would you recommend Treasury Direct? Yeah, absolutely go to Treasury Direct. So Treasury Direct, I recommend everybody do this that can, anybody based in the US. Treasury Direct is, as it sounds, the name implies, treasuries you buy directly from the United States government. You cannot buy these from any bank. Okay, and what you do is you invest in what are called Series I savings bonds. Okay. And you can put, I think, up to a maximum of 10,000, but Congress is going to increase this to 30,000 soon. And so you will make 6.89% per year. Now, what happens with this bond here Okay, and you have to search for the phone number on this website, Treasury Direct, to talk to somebody there. What happens with this bond is every 6 months, meaning on November 1st and April 30th, this rate will change. So if inflation is much worse, by April 30th, this will go up a lot and vice versa. Okay, and you do pay federal tax on this as well. It's an absolute no-brainer. I put my reputation online. This is great to invest in. You'll never lose money either. Even if rates, if we go into a deflationary environment, you still won't lose money on this. Now, you have to tie your money up for at least a year. And if you sell this within 5 years, then you lose 1/4 of interest payments, which is not that much. Yeah. Okay. Okay. All right. Next up, Julie wrote, you may have mentioned this, sure, but what Madoff documentary on Netflix was absolutely fascinating and so unreal that the regulators didn't nab him. Crazy how much the industry overlooked it. It's unbelievable. Yeah. Yeah. I'm sure he greased a lot of politicians as well. A lot of hedge funds, he's not a hedge fund, but a lot of hedge funds, they used to donate a ton of money. They probably still do to politicians. And this is why the government didn't really go after hedge funds until the Obama administration. Yeah. Okay. And then Manas wrote, thank you for everything, my mentor. God bless you all forever and ever. And see you next week and forever and ever. What if it's 70? God bless you too. And namaste. And God, I love your emoji there. What if 75 basis points is going to be the norm? Yeah. Well, if that happens, then yeah, I think all risk assets will get slaughtered. Yeah. Yeah. Okay. And the real black swan, though, is geopolitical issues. God willing, I pray that the United States and China can mend things, and because I don't like the way things sound right now, it's kind of scary. Yeah. Okay. All right. Next up, Kyle wrote, "What are your thoughts on drop shipping? I have several friends doing millions of revenue with 30% profit margins." Yeah. Yeah. So I'm not an expert in this area. I get asked about this a lot. What I've done with drop shipping, or at least, is I've gone to AliExpress.com and I've imported stuff with my kids and sold it. And I'll show you how this works. So what you do is you go to AliExpress.com, which is, of course, owned by Alibaba. And what you can do is you can buy stuff that's really cheap and then sell them over eBay or on other platforms, right? You can get really, really cheap. But what you want to do before you do this is try to test them first. Don't sell anything that's copyright violation, though, okay? But for example, here, for 99 cents, you can buy these silicone straps for an iPhone, okay? You buy them in bulk. And so you can buy a bunch of these and see if that's going to work on eBay. So what you do is do a search on eBay for a silicone strap. And if you can sell them for $3 or $4 each, not including shipping, then this looks like a good arbitrage opportunity. Yeah. The problem is, though, when you order this stuff, it can take a month for it to arrive. It is cheap because it is subsidized by the Chinese government in terms of low, if any, shipping prices. Yeah. Okay. Okay. Give me 1 second. Let me go over here to Zoom. Okay. You know what I'm going to do? I'm going to go over to Zoom for the last couple minutes here. And then I'll try to answer more questions here you guys have on YouTube Live. If I can't, just save your questions for next week, please. All right, let me go over here to Zoom. And Brian is here as well. And always fun talking to Brian and Daniel and Jenny. Okay, great. And Brian actually on his wall. Brian, I'm so sorry to do this. I know you're about to join. On his wall behind him, he's got Spider-Man #1 in 9.2 condition, which is worth a lot of money. Okay, so Daniel and Jenny, do you have a question? I have to unmute myself first, of course. Hey, Daniel and Jenny, hope all is well. Let me know if you have a question. Go ahead, please. Jenny, go ahead.
I'm so sorry. What?
Oh, go ahead.
Oh, I'm so sorry. Hi, how are you?
Good. How are you?
Oh my God, it's so good to see you.
Good to see you too. And I loved your questions on Renaissance technologies as well. Yeah.
I love your answers. It's amazing. Even if I don't, like I thought the way to get in is to try to reverse engineer and try to beat them, and then and then try to get in later. Anyway,
Yeah.
but yeah. Oh, one thing I think would really make you happy. I'm going back to doing the MBA. All in one course, so I'm finishing it hopefully within the next 3 months.
Okay.
I have already have a contractor which would help me with the video editing, so it would look very professional, hopefully.
Okay, cool.
Yeah,
awesome.
I'm excited.
Excellent. And Ginny is talking about creating a Vietnamese version of my course called An Entire MBA One Course, and the proceeds would go to build schools for women in Vietnam. Yeah, very cool.
Thank you very much.
Yeah, God bless you. Cool. Excellent. Well, if anybody has questions, please go ahead. If not, what you guys can do is just stay on hold, and I'll see you guys soon on the silver call. Okay. Okay. I'll be back soon. Thanks, guys. All right, hold on a second. All right, let me go back here to. And so Ginny is based in Vietnam, and then Dan there is one of my students as well. He's based here in the Bay Area. He used to work at Oracle for years as well. Really good guy. Yeah, they're both great. Okay. Hold on a second here. All right. Next up, I've got Craig wrote, I found an advisor at investment banks in Jamaica that took your course. Some took CPI or 365 career courses, and everyone who had no experience in finance said your course is easier to understand. Thank you. I appreciate that. Thank you. I even have an accredited course. It's a CPA course you can take on Udemy called Introduction to Finance. Thank you. God bless you. Okay. Next up, T wrote, thank you so much, Chris. I really appreciate it. I sent an email. We also share the same alma mater, Columbia University. I respect you and what your course will be tremendously helpful. Thank you. I appreciate that. Okay. Next up, Manos wrote, my mentor, I disagree with you with oil concept. Sure. You think 10 years from now, much more oil will be consumed because it may not be used to fuel vehicles, but it would definitely be used to build products. Yeah. I don't remember saying anything about 10 years, but I do respect your opinion. Thanks. Okay. And then I think what I was implying, Manas, is that in the long run, we won't be using oil. In the very, very long run. Yeah. 10 years is probably not the very, very long run. Yeah. But I think eventually, what Putin is doing is going to force a lot of countries to invest a lot of money in clean tech. Yeah. Eventually. Okay. I respect your opinion. Okay, next up, Kyle wrote, my mom's financial advisor chose mutual funds with over a 1% expense ratio. I called him out and asked, why would you invest in these when you can get better returns and less expenses? He said I was wrong. Okay, let me know why he's saying that. And he might have a bias as well, okay, the financial advisor, because they might work for a firm where they get commissions to sell a certain product. Okay. And what I would do is this, okay? I would look at just the VOO, okay, the VOO ETF, and compare the return of the VOO over the past 20 years to whatever mutual fund they're mentioning and include fees. Yeah. Okay. Next up, Susan from St. Louis wrote, hi, Chris. Hi, everyone. Chris, I'm so excited to see your types of medicine props in action. Thank you. This will be coming out later this year. My How to Invest in Bonds course. Yeah. Again, on March 23rd, I'm going to have a former Fidelity portfolio manager and fixed income expert coming on to explain fixed income to everybody. Yeah, including me. Okay, and T wrote, great. Thank you so much for answering my question. It's been tremendously helpful. You're most welcome. Very cool. And then Ginny wrote, by the way, I'm coming back to doing the MBA video, the Vietnamese one. Thank you. I'm so excited, and thank you so much for allowing Tao and myself to translate the MBA course into Vietnamese. And I saw Tao sent me a picture of her son, who's adorable. She and her husband Brett are doing well in Kansas. Yeah. Okay. All right, guys. So I do have to wrap it up. I know there's a lot more questions. If you're in my Silver MBA program, you can join Zoom right now, and I'll answer questions over Zoom for an hour. If you're in my Platinum and Gold MBA, I'll see you at 11:20 today for our 2-hour weekly office hours. If you're a Platinum student of mine, I'm looking forward to doing one-on-ones with you later today. Please like, subscribe, and all that stuff. My marketing team wants me to say that. And God bless you all. And I'll see you guys next week and every week. And I end every webcast with this life-changing video. It's a Steve Jobs interview that I licensed from the Silicon Valley Historical Association. God bless you all. And thank you. I'll see you soon.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it. That's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.